The best low-risk investments for 2019. That's what we're talking about today. My name's Jeff Beers. This is the 40 Finance channel. Let's take a look what's on the list. Okay, so the first one on the list is an online savings account. Again, we're looking for low-risk investments that don't give us any threat of losing money, but yet give us potential for the most return with the least amount of risk. And online savings accounts certainly provide that, although the return is pretty small. You can see on here, I got this from Bankrate. The CIBC Bank USA is paying 2.39% interest rate with a $1 minimum balance and no maintenance fees. So if you compare that to probably what you're getting in a traditional brick and mortar bank, which is like 0.09 or 0.09, whatever it is, it's pennies, pennies, pennies on the thousands of dollars. So this is an easy move with no risk. That'll give you an opportunity to make at least a little bit of money with your savings. All right, the next opportunity we have for low risk investment is a 1-year CD. I tried to pick everything on this list as something that you could do over a 12-month cycle and get the best amount of returns just for the single year of 2019. And a 1-year CD would offer a slightly higher return than an online savings account. You see here the Capital One 360 1-year CD is paying 2.7%. And there's a $0 minimum deposit, so just about anyone can play in that game. The catch with the CD, certificate of deposit, is that it is a commitment on your part to leave the money in for 1 year. So compared to the online savings account option where you can access your money essentially at any time, the CD requires more of a commitment. It also requires more of an upfront money, whereas the online savings account, you can continue to add, you can subtract here and there if you need to, but over the long haul, if you're saving more, you get to take advantage of that each day that you add to it. Where if you're coming in on a CD, typically you're gonna have to have a set amount that you sign up for, right? So if it's $1,000, if it's $2,000, that ties into your year. Now you could add more later, but you're gonna have to wait a whole nother 12 months to access whatever you add. So something to keep in mind there. All right, so the third low risk investment on our list today is corporate bonds. So corporate bonds are basically give corporations an opportunity to borrow money from investors. They guarantee a certain rate of return, and the bond has really nothing to do with the performance of the company, right? So as opposed to, let's say, Macy's, if you bought Macy's stock, you're at risk for the ebbs and flows of the stock price. Where if you bought a bond from Macy's, they're pretty much guaranteeing you that over 12 months, if you commit X amount of dollars, they're going to give you a certain return. And if we see here on the chart and you go down, the risk factors of corporate bonds are broken into categories based on a grading system with, AAA being the highest, most credit-worthy corporations. Obviously, those folks have the least amount of risk, so they're paying the least amount. They're paying 2.5%. If you get down into the high Bs, though, you can get a return of 4% a year. And some people might be nervous about the creditworthiness of a B bond issuer. I would say that you just have to study the company. I think it's very, very low risk for a 1-year bond for any company that's in a B rating, okay? So you just have to comb through the list, see who you're comfortable with. The likelihood of a big corporation randomly going out of business and not paying its bonds in a 1-year cycle is practically unheard of. You'd have to be way down in penny stocks and things of that nature just to see a complete dismantling of an entire corporation. So I would still feel pretty good with a B-rated corporate bond at 4%. Certainly, I would probably opt for that over the CD option, just because if I'm gonna have to lock my money up, I'd like to get a couple bucks more. But frankly, if I'm gonna do any sort of deposits, I'd probably stick with the online savings account, simply because I can access and build up over time without the 1-year commitment. But the option is here, and the returns are much better at 4.07% than an online savings account of 2.39 or whatever it was on the first slide. So there are other opportunities out there. All right, so number 2 on the list of low risk returns for 2019 is a little bit controversial, but if you stick with me here, there's a pretty big opportunity to make some money. So I call it credit card hustling, and it's basically taking advantage of all the different reward programs that are out there with credit cards, trying to find ones where, assuming you can pay your bills on time every single month, that you might be able to make some dollars. And here with this Chase Sapphire card, which traditionally has a $95 annual fee, which is a huge no-no in our low risk assessment, but that is waived the first year, right? And what you're getting here, according to NerdWallet, where I found this, earn 50,000 bonus points after you spend $4,000 in the first 3 months from the account opening. So that 50,000 bonus points then can turn into $625 towards travel when you redeem them through the Chase portal. So basically, a $4,000 investment can redeem $625 in travel rewards. That's a 15% return. The only way this works, though, is if everything that you're doing here, you were going to do anyway, right? So the $4,000 in spending, were you going to spend $4,000 in 3 months anyway? So there's no incremental spend, right? If all of your household charges, grocery store, whatever you would traditionally use with a bank card, could you move that to a credit card, spend the exact same amount of money, pay it off immediately, basically, and then you would redeem these 50,000 points and use that as a credit towards a trip you were going to take anyway. All right, so it doesn't work if you spend $4,000 on junk you weren't going to buy and spend $625 or use your redemption of $625 towards a trip you weren't going to take anyway. That doesn't really work. But if you know you're taking a vacation this year, you know you're spending $4,000 in 3 months, this is a 15% return opportunity. A little controversial, but it works if you have the right mindset. All right, so my number 1 investment opportunity, low risk for 2019, is pay off loans or cards over 5%. So in the 5% threshold, you can kind of mix that up however you see fit. What I say at 5% is you're paying more interest than any investment can guarantee as far as a return in 2019 in a 12-year span. So right off the bat, if you're trying to manage multiple online savings accounts and you're trying to figure out which corporate bonds are going to be best for you, if you're sitting on loans or cards over 5% interest rate, you're doing it wrong. You got to get rid of these first so that that's the quickest way to basically redeem 5% on your money. I did a quick calculation here with this calculator on NerdWallet, and basically, if you have a $5,000 credit card balance, okay, and the average interest rate on a credit card is 18%, and you said, okay, well, I'm making minimum payments on my credit card so that I can save more cash or invest more over here, then if you just made the minimum payments, it would take you 273 months and you'd pay $7,000, okay? Or $7,000. So that's a ton of money, and you can kind of do like some basic math that says, hell, even if I paid it off twice as fast as that, I'd still be paying $3,500, which is a ton of money. Now, if you changed your strategy on payments for 2019, you paid $500 a month, it would take you 11 months to pay off everything, and you would only pay $458 in interest. So while that is still a price to pay, it's basically like netting, $6,500 or multiple thousands of dollars depending on what you were traditionally paying with your credit card. So right off the bat, if you're looking for easy, safe investment opportunities, getting rid of debt is a pretty big one, particularly if you're in credit cards. Now, I would say if you have a low, like 1%, 2% car loan, if your mortgage, for example, is running at 6%, there's other things to consider, particularly with a mortgage because of the way write-offs occur. But from just a straight consumer debt, credit cards, bank loans, anything else that's over 5%, and that's going to be one of your best guaranteed investments for 2019 is getting rid of that so that you're not paying those extra interest fees. All right, so you saw the top 5, but I have a bonus one. Okay, so 100% returns. How can you get 100% returns in 2019? No questions asked. Trade your free time for money. Free time is whatever time you have that you're not basically making money or fulfilling duties and responsibilities that are important to your life. Okay, so you can take your free time, and MMO is make money online. You can go on the internet. That's not the topic of this video, but there's 60 million ways to make money online. Some of the dollars are small, some of the potential dollars are big. You can sign up and do work on a freelance forum is a really easy example. You can sell products is another one. Whatever it is, if you spend the time into doing that, you're going to make 100% returns compared to, let's say, watching TV and playing video games. Sales is another one that I feel like folks who are not very technically inclined, they don't want to get into the internet or build websites. There are dozens and dozens and dozens of companies in your area that are looking for salespeople on a part-time basis to sell their product. And one big example that I see around here is home improvement sales, right? So gutters, any, kitchen remodeling, bathroom remodeling. They're just looking for prospectors to go out, hang some cards, talk to some people, generate leads. And if you enjoy talking to people, you're not going to make $1 bazillion, but if you want to spend half your Saturday generating leads for home improvement or something similar, then you can get out there, spend a few hours, talk to some people, generate some leads, make some money. And when you walk away, you're done. And then lastly, services, right? So any service you can provide, okay? There's tons of stuff people do not want to do. They don't want to mow the lawn. They don't want to clean their house. They don't want to clean their garage. Whatever it is, there's an opportunity for you. And some of the, like stay-at-home moms have gotten even more creative with crafts and birthday parties and all these things that people are good at that folks don't have the time to do. Run a service business, a small service business, okay? Trade your free time and your hobby interests for money, get 100% returns. That will be your best low-risk investment for 2019. I'm Jeff Beers. This is the 40 Finance channel. Please like and share this video as I try to ramp up this channel. I really appreciate your support. We'll see you on the next video.